Hold on to your hats, folks. The crypto market's been on a wild ride lately. Bitcoin's price has been swinging like a pendulum on steroids. Ethereum's been following suit. And don't even get me started on the altcoins. It's enough to make your head spin faster than a fidget spinner in a tornado. But here's the thing, volatility in crypto isn't new. It's as common as bad hair days in a humidity wave. What we're seeing now is just another chapter in the ongoing saga of digital assets. Some days you're up, some days you're down. That's just the nature of the beast. Let's get one thing straight. Not every dip is a crash. Sometimes what looks like a catastrophic fall is just a natural part of the market cycle. In the world of finance, we've got a handy little term called a correction. It's a normal and healthy part of any market. It's like when you're on a diet and you have a cheat day. You might indulge a bit, but it doesn't mean you've given up on your goals. It's not the end of your health journey, it's just a temporary setback. Similarly, a market correction is a brief pause in an otherwise upward trend. In the stock market, a correction is typically defined as a decline of 10% or more from recent highs. It's a signal that the market is adjusting. In crypto, well, let's just say the numbers are a bit more flexible. Corrections can be more dramatic, reflecting the market's inherent volatility. We're dealing with a market that can swing 20% in a day just because Elon Musk tweeted about his dog. It's unpredictable and fast-moving. The speed and severity of the decline, the overall market sentiment, and the underlying reasons for the drop all play a role. Each factor can influence how the market reacts. In crypto, we also need to look at things like trading volume, network activity, and the number of active users. These metrics can provide insights into market health and developments in the broader blockchain ecosystem. Innovations, regulatory news, and technological advancements can all impact the market's direction.
I've been around the block a few times in the world of finance, and I've seen markets rise and fall, fortunes made and lost. But when it comes to crypto, I always like to hear what other experts are saying. So I reached out to some of the brightest minds in the space to get their take on the current market situation. Their insights are invaluable, especially in such a volatile and rapidly evolving market. Michael Saylor, the CEO of MicroStrategy and a big-time Bitcoin bull, had this to say: Bitcoin is a bank in cyberspace, run by incorruptible software, offering a global, affordable, simple and secure savings account to billions of people that don't have the option or desire to run their own hedge fund. In other words, he's not worried about short-term price fluctuations. Saylor believes in the long-term value of Bitcoin and sees it as a revolutionary financial technology.
On the other hand, Peter Schiff, a well-known gold bug and crypto skeptic, warns, the crypto bubble is bursting. It's not going to zero, but a lot of people will lose a lot of money. While Schiff has been predicting Bitcoin's demise for years, his perspective serves as a reminder to always consider the bearish case. His cautionary stance highlights the risks involved and the importance of being prepared for potential downturns.
Kathy Wood of ARK Invest takes a more balanced view. We believe that the current pullback is a healthy correction in a bull market. Her firm continues to invest heavily in crypto-related companies, betting on the long-term potential of blockchain technology. Wood's perspective is that these corrections are natural and can even be beneficial, providing opportunities to invest at lower prices and strengthen the market's foundation for future growth.
Let's face it, investing in crypto is not for the faint of heart. It's like riding a bull while juggling chainsaws. Exciting but potentially dangerous. That's why risk management is crucial. You wouldn't go skydiving without a parachute, so don't dive into crypto without a safety net. First rule of Crypto Club: never invest more than you can afford to lose. I don't care if your cousin's roommate's dog walker swears that Doge Moon Rocket coin is going to 1000x. If losing that money would mean you can't pay rent, it's too much. Diversification is your friend. Don't put all your eggs in one crypto basket. Spread your investments across different coins and tokens. Set stop-loss orders to automatically sell if prices drop below a certain point.
Section 7. The long game. Why HODLing might be your best strategy. HODL. It's not a typo, it's a way of life in the crypto world. For the uninitiated, it stands for hold on for dear life. And in times like these, it might just be your best strategy. Think of it like planting a tree. You don't dig it up every day to check on the roots. You water it, give it time, and trust in the process. Historically, HODLing has been a winning strategy in crypto. If you'd bought Bitcoin at any point in its history and held for at least 4 years, you'd be in profit today.
Section 8, diversification, the key to weathering crypto storms. Remember the old saying, don't put all your eggs in one basket? Well, in the crypto world, it's more like don't put all your tokens in one wallet. Diversification is key to managing risk and potentially maximizing returns in this volatile market. It's like being a chef with a well-stocked pantry instead of just a single ingredient. Start with the big players. Bitcoin and Ethereum are like the rice and beans of the crypto world. They form a solid base for your portfolio. They're not immune to volatility, but they've got the longest track records and the most institutional support. Look into some of the promising altcoins and tokens. These can be riskier, but they also offer the potential for higher returns. And here's a pro tip. Don't forget about crypto-adjacent investments. Section 9. Learning from history. Crypto's past crashes and rebounds. All right, time for a history lesson. Crypto's been around for over a decade now, and in that time, we've seen more ups and downs than a yo-yo competition. Remember the crash of 2018? Bitcoin went from nearly $20,000 to under $4,000 in a matter of months. People were writing obituaries for crypto left and right, but what happened next? Bitcoin didn't just recover, it went on to hit new all-time highs, and it's not just Bitcoin. The entire crypto ecosystem has shown remarkable resilience over the years. Each crash has been followed by a period of innovation, growth, and eventually new highs. After the 2018 crash, we saw the rise of DeFi. The 2020 dip was followed by an explosion of NFTs. Section 10, looking ahead, the future of cryptocurrency and your role in it. So where do we go from here? The landscape of cryptocurrency is evolving rapidly, and it's crucial to stay informed and adaptable. If I had a crystal ball, I'd be sipping margaritas on my private island right now. But the future, while uncertain, holds immense potential. But what I can tell you is this: cryptocurrency isn't going away. It's here to stay and will continue to grow and mature. It's not just a passing fad or a get-rich-quick scheme, it's a groundbreaking innovation that's transforming industries. It's a technological revolution that's reshaping the way we think about money, finance, and value. Blockchain technology, the backbone of cryptocurrency, is being integrated into various sectors. The future of crypto is likely to involve more regulation. Governments and institutions are recognizing its significance. That might sound scary to some, but it's actually a good thing. Regulations can provide a safer environment for investors and users. Clear regulations will bring more institutional money into the space, which could lead to more stability and growth. This influx of capital can drive innovation and adoption. We're also likely to see more real-world adoption of crypto and blockchain technology. From buying coffee to securing contracts, the applications are endless. And as more people start using crypto in their daily lives, its value proposition will only grow stronger. Your role in this future is to stay informed, be adaptable, and embrace the changes that come.